Hello, this is Wolf back again with another video on gold. So let's get straight to it. This is gold on the monthly chart. So if we zoom in a little bit, you can see that gold has basically been in a consolidation phase for the past 2 to 3, hell, even 4 years. Since 2014 we've been consolidating in this range. And if we zoom in, today is 28th of May, so it's towards the end of May. So this is the current monthly candle, which will be complete in a few days. But if we look at the previous month, you can see this is a very nice shooting star candle formation, which majority of the time signifies further bullish momentum. It shows there's a lot of sellers in the market. Buyers were able to push the price all the way up, but sellers pushed it all the way back down and then some. I like to see these kind of candles. So when I saw this at the end of last month, beginning of this month, I knew that there would be bullish momentum coming within this month. And as you can see, so far there has been bullish momentum a little bit to the upside, liquidity grab, but then bears were able to push it all the way back down, and then it's been a tug of war. But right now we still are in bearish territory, and it's looking like we are going to close this month bearish. So now if we go to the weekly for more clarity, and we can see what happened. So last week we ended the week with a small bearish candle. As we can see, there was a gap from the week before. It jumped up, but then as you can see, this descending trend line has held very nicely. It started at the top and it's been respected once, twice, and now 3 times. So now we could be seeing further bearish momentum. But if we zoom out, you could see here that I have this channel that I have drawn that price action has been respecting. Now I connected it from this point right here, which was in December of 2017, to this point. I initially had another trend line connecting these 2 points, and if I draw it, I'll show you exactly what I was looking at. I was looking at something like this. So when I was doing my analysis, I noticed that even though this was a break, but then it quickly made a U-turn and then popped right back in. So you could consider this a false break, even though these are weekly candles. But then what I noticed was that when it came to this point, it broke, and then it seemed to make a retest of that broken trend line before dropping further, which validated this trend line. But then I later on saw this trend line, and then when I put this trend line, then it made a little bit more sense, especially with the parallel trend line over here. So you can see price action more or less respecting these levels, false break, and then respecting this level to the T. So I switched to this trend line and I held it, and as you can see, price has also respected this trend line. I do have Kumos in the background. I just like Ichimoku, I trust Ichimoku, so I just use it as an added confluence for some of my entries. But as you can see, it was right at the top of the Kumo, which is support, and at the 1290 level. So a lot of confluences of support right there. So when it came here, I knew that bulls would see this as an opportunity to come back in. But as you can see, despite that, this trend line has been respected very nicely. Price came, bounced, and now it's at this trend line. Now if we drop down to the daily, we can get a lot more clarity now. Now this is where things get interesting. As you can see, this is the range that we have been locked in gold for quite some time, since the beginning of the year. It's been bouncing from around 1360 all the way down here to 1310, or some might even consider up to 1300. we've been bouncing in and out, in and out, in and out, and as you know, consolidations don't last forever. There's bound to be a breakout happened last week or last 2 weeks if I'm not mistaken. Around here there was a false break, it dipped back in, did one more retest of this trend line, and then dropped like gold always does. That was very nice. I was lucky to get in at a trade right here, and then I was able to go all the way down here. It was a very nice trade. But then after that, obviously impulse move, breaking out of this range, you would expect a retest before continuation. But now this here, here's where things get a little bit tricky. As you can see, we are at the bottom of this ascending channel. So if we are to respect this channel, gold will reverse and just continue its merry way upwards. But for some reason, I have a feeling that after this intense consolidation phase that we've had here, I think bears are just like really happy, and they're gonna keep driving prices down. And if you notice the price structure has been respected very nicely. See, down, pull back, down, pull back. As you can see, this pullback was to a key level here where they found a lot of support, so it respected that area, that structure. Then it came back, and now it pulled back up here to respect this level of structure. So structure has been respected very nicely. So I guess this coming week, we will have to observe and see what will gold do. Will gold respect structure and continue its downward momentum, or will it respect the ascending trend line that it has, ascending channel that it's been for a long time, and continue up? Personally, I have a bias towards the downside. I would like to see gold drop. Even if it doesn't break out of the channel, I would like it to see it retest this level, which could also be a confluence of a double bottom, since it has already touched it once, goes up and then comes back and maybe does a double bottom before reversing. Or it could, if it has enough momentum, the bears could totally blow this blow the momentum out of the ascending trend line, sorry, ascending channel. Let me delete this. Yes, ascending channel. So either way, I'm expecting a drop. Now the drop could either be up down to here, to this level, just to retest, make a double bottom like I said earlier, or it could continue all the way and break out, retest the channel, and then continue its way downwards. But obviously I have to keep in mind that there is a possibility that this channel will be respected like it has been. I mean, there is no reason for it, you know, to not be able to go back up. And as you know, gold is a very safe haven asset with the tensions in the US and other fundamental factors, even though I don't really pay mind to a lot of the economic fundamental news that is out, but I do know gold is really like tightly associated with all the fundamental impact news that happens around the world, so I can't be oblivious to the things that are going on. So with that being said, whatever it is I just said, yes, my bias, gold to the downside. Possibility, if it breaks structure, then it can continue the rally up. As you can see, even the Kumo is still bearish. Our future is still dark. Everything is to the downside. Trend line is being respected. This is the daily time frame. We have as you can see, I didn't explain this. This right here was a fib that I drew from the last impulse move from 100 down to the bottom, and as you can see, A, B, and then the C was between. I drew this ever since it was consolidating here, and I plotted this out as the 50 to the 61% level. Like, this would be like a kill zone that I was expecting price to at least reach here. Now I didn't take a buy because I was only looking for shorts, but as you can see, price has stalled around this area. So looking further, I expect gold to either drop or break. And that's my analysis for this week. Thank you very much.